Good morning, good afternoon, depending on where you're connecting from. If you can hear me loud and clear, please drop a comment. You all are welcome to today's live stream. You're welcome, you're welcome. Please confirm you can hear me loud and clear. How prepared are you for the new trading week? Please confirm you can hear me loud and clear. Confirm you can see my screen. This is Chibuzoke Lechi. Good evening. Confirm you can hear me. Confirm you can see my screen. Are you prepared for a profitable trading week? Are you prepared for a profitable trading week? If you are prepared for a profitable trading week, I'd like to know which pair you're considering trading this week. Which pair is going to pay you this week? I'd like to know. You should have selected the pairs you're going to be trading this week if you are prepared for a profitable trading week. I'd like to know in the comment section which pair are you considering trading this week. If you don't know what pair you're going to trade this week, you are not prepared. The probability that you end the week in profit is very slim. If by now you've not selected the pairs you're going to trade, the probability you're going to make it this week is very slim. You need to be prepared. A soldier will not go to a war without being prepared, without being trained, prepared for the war. Trading is war, the battle between buyers and sellers. And if you have to win in that war, you have to be fully prepared. Sister Milola, good evening. All right, great. So we're not going to waste time tonight. So we'll go straight to business. So we'll start by looking at the calendar for the week. That's the first thing I do. I need to know when the high impact news will be released. Okay. Because when these news are released, that is when we see high volatility in the markets. So it's very important that you check the news, check the calendar. If you don't check the calendar, if you don't know when this high impact news will be released, you will take trades and you'll be shocked that your stop loss will be used as liquidity. And you'll be wondering what happened. I had a very nice setup. The technical setup looks very good, but this instant went to hit your stop loss. That's because a major news was released and you were not aware. That's why they used your stop loss as liquidity. So it's very important that you are informed, you are aware, you have the calendar where you can, see the news that will be released for the week. So why not check it? So the week starts today, 24th of May 2026. So tomorrow, today is Sunday, 24th, no major news. Monday, no major news. Tuesday, no major news. So it's on Wednesday, we would expect high volatility in the market. Okay. Australia will be releasing its CPI data, and New Zealand also will be releasing its official cash rate statement. So press conference on Wednesday. So we should expect high volatility on Australian dollar pairs and New Zealand dollar pairs. I don't expect volatility on Australian dollar pairs and New Zealand pairs. Most likely, Australian dollar pairs and New Zealand pairs will range before this high impact news. Okay, so if you insist, if you see a good technical setup and you want to execute on Australian dollar pairs, be very conservative. Be very conservative. Reserve some capital so that if the news goes against you, if it does not favor your the trades you executed before the news, you still have some funds that you can still risk on trades after the news is released. Okay, so if I'm going to trade Australian dollar pairs before Wednesday, I'll be very conservative. Okay, so if I see a very good technical setup, I would definitely want to execute such trade. I have to stick to my trading plan. Okay, once I see my setup, I want to execute it, allocate a certain percentage of my capital, 1% or 0.50% of my capital to that trade. That's what we call discipline. Okay. So on Thursday, United States will be releasing core PCE price index, prelim GDP. Now, before Thursday, we'll definitely find some setup on USD pairs. We'll find some setup. So you have opportunity to trade USD pairs Monday, Tuesday, Wednesday. Hopefully before Thursday, you would have made some good profits. So if you see a very good technical setup on USD pairs on Monday, Tuesday, Wednesday, take it. Okay? Take the trade. Then on Thursday, after this news is released, if the news is positive or negative for the dollar, you know which direction to follow on USD pairs. Then on Friday, please confirm you can hear me. Confirm you can still hear me. On Friday, May 29th, Bank of England Governor Bailey will be speaking, okay, by 9:20 a.m. and by 1:30 p.m. Canada will be releasing its GDP, that's gross domestic products data, by 1:30 p.m. So I think this week should be good. We don't have much news for the dollar. Dollar is the king. Dollar is the king. Is what I think is what controls the market. Is what controls the market. So since this week we don't have much news for the dollar, we should expect a good trading environment this week. This week should be a good week. But you still have to apply proper risk and money management. Okay, don't be aggressive. Don't be aggressive. It's very important. Always trade to trade another day. Don't take unnecessary risk. Take unnecessary risk, you blow your account and you have to go and work to raise funds again. Be very conservative. Be very conservative. This market is going nowhere. This market is going nowhere. If you keep taking unnecessary risk, you'll be the one keep blowing your funds. The market remains the same yesterday, today. It remains the same yesterday, today. So you just keep the one blowing your account, hurting yourself. Then you come back again. The market's still here waiting for you. So please be very conservative. Be very conservative. I always preach proper risk and money management. That's the secret to profitable trading, long-term trading. If you want to be in this business long-term, you're thinking long-term, then you need to manage risk. You need to manage risk. It's very, very important. I know these past 2 weeks, a lot of people have blown accounts. A lot of people have blown their accounts. I have a drawdown of maybe just 1% of my account, but I know a lot of people have blown their accounts this past week and the previous past week. A lot of people have blown their accounts. It's better to have a drawdown, a little percentage drawdown, okay? Because if you have funds, you definitely recover from the losses. Losses are inevitable. You would experience drawdown. Every Forex trader experiences drawdown. Every Forex trader. If anyone tells you he or she does not experience Forex trade drawdown in trading, that person is lying to you. Nobody wins every trade. You will lose. You will lose. Okay. All right. If you have any question, any pair you want me to analyze, gold. Definitely, we'll look at gold. We cannot have a meeting without analyzing gold. I'll definitely look at gold. So first thing, we need to analyze yen basket and dollar index to know the strength of the yen and also the strength of the dollar. Okay, after you've checked the calendar, the next thing you should do is to analyze DXY dollar index to know the strength of the dollar and also analyze the yen. Now, if the dollar is bullish, if DXY is bullish, it means dollar pairs that have dollar as the counter or quote currency would be bearish for that week because we expect dollar to be bullish. Now, if DXY is bearish, okay, if the trend on DXY is bearish, it means dollar will be weak. It means dollar will be weak. So if dollar is weak, you want to buy currencies that have dollar as the quote currency, because in that case we want the dollar to lose value and we want the other currency, which is on the right, which is the base currency, to gain value. I hope that is clear. On a currency pair, you have two pairs. I believe you should know that. For example, GBP USD, GBP USD. Let's use GBP USD as an example. Now you have two pairs. We have the base currency, which is the first currency by the right. GBP is the base currency in this case, and we have United States dollar is the counter or quote currency. If you are buying GBP USD, you expect Great Britain pounds to gain value against the dollar. So you will buy GBP USD. Now, when you expect the dollar, which is the base, to gain value against GBP, which is the base, sorry, USD, the counter, you will sell. So when you place a buy on a currency pair, you expect the base currency, which is always the first currency on the right, to appreciate against the counter. If you sell GBP USD, you expect GBP, which is the base, to lose value against the counter. Remember, when you are selling one currency, you are buying the other currency. That's why Forex trading is said to be a simultaneous buying and selling of various countries' currency. You do two things at the same time when you execute a trade. You are buying one currency, you are selling the other currency. You buy the currency that you feel is going to appreciate in the future, and you sell the currency that you feel is going to lose value in the future. You don't want to hold on to a currency that is going to lose value in the future. You only want to buy currency that would appreciate in the future. That is how you make money in the market. When the value appreciates, you sell it and you take profit out of the market. Okay, so let's look at yen basket. Now for yen also, if you analyze yen, if yen is bullish, you want to sell JPY pairs, because we have the yen as the counter on JPY pairs. On all JPY pairs, I think the yen is the counter. So if yen is bullish, okay, you want to sell JPY pairs. For example, GBP JPY. You want to sell GBP JPY. Okay, GBP JPY, CHF JPY. Okay, so if yen is bearish, it means yen is going to lose value. Yen is going to lose value. So you're going to buy GBP JPY. So we'd expect Great Britain pounds to gain value against the yen. So you buy GBP and you sell Japanese yen, because the yen is expected to lose value. But if the yen is bullish, okay, if the trend of the yen is bullish, it means we expect the yen to gain value. So if yen would gain value, we want to sell Great Britain pounds against the yen. We'll sell Great Britain pounds and we'll buy the yen. I hope that is clear. Okay. So let's start with yen. Let's start with the weekly time frame. You always start with the weekly time frame. After the close of the market for the week, if you want to start your analysis, you start with the weekly time frame. Weekly time frame. Now, if we look at what we have here on the weekly time frame, we had this resistance, we had this previous high, and I think last week they swept that high. You can see, okay, this was weekly, that's like 4 weeks ago. This high was used as liquidity, and above this high also you can see we have this fair value gap that was not filled. So this could be the next draw on liquidity. Okay, this could be the next draw on liquidity. Now let's look at what we have on. This is the weekly time frame. Last week candle closed bearish. It's closed bearish, but on the weekly time frame, what can we find here? We can see that we had this fair value gap here. We had this fair value gap here on the weekly time frame. Okay, and there was an attempt to test that fair value gap. Probably they want to fill this fair value gap before going bullish. But let's go down to one to the next lower time frame. So these are the things you need to do on weekends before the market open. The first thing you need to do is to identify the levels of liquidity. The levels of liquidity. And where does liquidity reside? Liquidity resides at previous high and lows of the daily, the weekly, the monthly candlestick. That is where liquidity resides. So you need to identify those highs, those obvious swing highs and swing low. That is the first thing you should do every week before the market opens. Those are the possible area. I can tell you that this week, it is either price will come down to this level, this low, or it will go up to this level. That's what is going to happen this week. It's either down or up. Those are the obvious swing highs and swing low. So identify those areas before you now go down to maybe lower time frame. See what's happening there, then you can know which direction to follow, whether to buy or to sell. Now, if you have identified this high and low and your bias is, so you could apply your Fibonacci. These things are very, very simple. Don't complicate this. You can just apply your Fibonacci. Okay, if your bias, if you just feel like you want to sell, okay, you want to wait for price to pull back to a premium area. Premium is above Fibonacci level 50. Just wait for price to pull back to a premium area. Okay, and at that premium area, you could find maybe a resistance, non-support that price might want to go and retest. Or for those of you trade ICT, probably there's an imbalance at that premium area. That is where you should take yourself. If you want to buy, wait for price to pull back to a discount. As we have it here, you can see that price from this swing high to this swing low, price is currently at a discount area. But at this discount, we still have a fair value gap that's not been filled. So there's a possibility for them to come and fill this gap or going bullish. So you buy from the discount and you sell from the premium. It's very simple. Very simple. Okay. So that's it on the weekly time frame. Now let's go down to daily time frame. Okay, so you can see what we have on the daily time frame. On the daily time frame, what do we have here? We have this resistance ton support. Let's go back here. You can see we have this also resistance ton support. You can see resistance ton support, resistance ton support. So this is a demand zone. This is a demand zone, and you can see there has been several attempts. This was the first attempt price tested this zone, and there was a rejection. And there has been several attempts, to test this zone, and there has been a lot of rejection from that. You can see from that area. And here we had this massive, this engulfing candle. You can see just this candle engulfed all these candles. This is a strong engulfing pattern. You can see, and after that engulfing pattern, price went into a range. This tells me the bearish momentum is still very weak. This tells me the bearish momentum is still very weak. After this aggressive move, the sellers have not been able to push the price, that far. You can see they will push it down a little. Buyers comes in back and push it back up. They push it down a little. Buyers comes in again and they push it back up. So this tells me that the bears are not really set for a bearish ride. They are not really set. The momentum is still very weak. So with what I have here, I will be looking for buy opportunity. With what I have here, I'll be looking for buy opportunity. On Thursday, you can see the pattern we had here, inverted hammer, okay, which indicates change from bearish to bullish. So I would only consider selling if this demand zone, or you call it your support zone, is broken. If a candle closes below this zone, then there's a high probability it's going to come for the liquidity residing at this low. I hope you are with me. Then it's likely going to come for this low if it breaks out from this zone. But in as much the market is still trading above this zone, I would only go for buys. I would only go for buys. Okay. Yeah, we analyze GU, GJ. Okay, we'll look at that. We'll look at that in a few minutes. Okay, so I only look for buys. So my bias for GJ this week for yen is bullish. That's my bias for yen. So I'll be looking for opportunity to sell yen pairs this week. I'll be looking for opportunity to sell yen pair this week because I want yen to be bullish. That's my expectation for yen. Let's look at dollar index. Okay. Please give the video a thumbs up if you haven't done that. And if it's the first time joining the live stream, just subscribe to the channel so that anytime I come on live, you get notified by YouTube. So what do we have here? Dollar, I would say for throughout last week, I would say dollar was just ranging. It didn't give a clear direction last week. It didn't give a clear direction. So last week was a challenging week because dollar was not set for buy or sell. So it was really a challenging week. So you can see this was Monday, Tuesday, Wednesday, Thursday, Friday. It sold on Monday, bought on Tuesday, sold on Wednesday, bought on Thursday, on Friday, bought. See, so I would say dollar has been in a range. But as far as I'm concerned, we have this. Let me start with the weekly time frame. So last week you can see the candle closed as an indecision candle. And you see that it closed as an indecision candle. Now, if you ask me where would price go to this week, it's either going to go up here. This is the most recent swing high and swing low. So I identify these levels first. Okay, so this is swing high, swing low. Now, where is price now? I also want to know if price is at premium or discount. So how do I know that? I would apply my Fibonacci from this swing high to this swing low. Where is price now? Price is at premium. Okay, so I will not want to buy dollar at premium. I will be looking for sell opportunity. You can see that. Also, his price, the price just filled an imbalance on the weekly time frame. I think we had an imbalance here on the weekly time frame. You can see this fair value gap here. You can see this fair value gap. Price also just filled it. So there are a lot of confluences, right, supporting the fact that there is a high probability that dollar might sell this week. You can see prices at premium. We had a fair value gap here. So you can see that. Then the candlestick pattern again is an indecision candlestick pattern, right? So let's go down to daily. After the close of the candle, what pattern do we have on the daily time frame? Okay, so you can see on Thursday, we had what looks like a shooting star after sweeping all the liquidity residing at this high, the highs of Monday, Tuesday, Wednesday. On Thursday, they swept that liquidity, and we had a candle that looks like a shooting star, though a bullish shooting star. In this case, you are advised to wait for the next candle to close bearish before you sell. Okay, then we also look at what we have here. We had this resistance. So because if you look at what we have here, we have this fair value gap here that has not been filled. But this will stop price from going higher. See, this could stop price from going higher because this is a support stone resistance, right? This is a support stone resistance. Can you see that? And this is also a mitigation block. I hope I'm correct. Those of you trade smart money. This is a mitigation. This is a mitigation block. Okay, this is a mitigation block. So this might stop price from going higher. Okay, so that's what I see. That's what I see. So I'm looking for opportunity to sell the dollar this week. I'm looking for opportunity to sell the dollar this week. Let's see what we have before our after the close of that shooting star candle. After the close of that shooting star, let's see what we had on 4-hour time frame. Okay, let's see 4 hours. So yeah, after the close of that candle, this was what we had on 4-hour time frame. You can see dollar is kind of ranging, but let's look at what we had here on 4-hour. Okay, so we had a sweep of liquidity. They also took this high, swept the liquidity residing at this high, and after sweeping that liquidity, what do we have here? So we had this massive, this drop, then the pullback. So if I apply my Fibonacci from this swing high to this swing low, price has pulled back to a premium. And I think at this point there's a fair value gap. This buy came to fill. Let's confirm on a lower time frame. So can you see the fair value gap? Most likely this was the reason for the buy. See this gap here? That gap has been filled completely. Can you see that? So price is currently at a premium area, and at that premium area I'm able to identify a fair value gap. And you see that this fair value gap also got filled. So that's the reason for my bearish buyers on also if you look at this from this point to this point, if you apply your Fibonacci from this swing high to this swing low, you can see that price has already also pulled back, and at this point also most likely there's a fair value gap. Let's see 15 minutes. Let's see 15 minutes. So on 15 minutes also you can see, okay, we had this fair value gap. We also had this gap here. Probably that's the reason for this gap here. That's the reason for the retracement. You can see. Now they know at this point. Let me explain what played out here. They know at this point what pattern do we have here. We had several bearish reversal pattern. We had a shooting star candle, then followed by a spiny candle. So with this, a lot of retail traders, those who trade candlestick pattern, would have executed sell. Please, can you hear me? Confirm you can still hear me. They would have executed sell, and where would they have their stop loss? Their stop losses will be residing at this high. So what they did with this buy was to go and sweep the liquidity, the stop losses that was residing at this high. That was what they did. And you can see after they swept that liquidity, look at the pattern we had on 15 minutes time frame. This is a doji. We call this a doji. Yeah, we call it a doji. Some will call it a shooting star because I think it has a small body. A valid doji is not supposed to have a body. You can see that. So this is a bearish reversal pattern. See, so I'm looking for opportunity to sell. Most likely, if the market open, we might see a gap on dollar index. We might see a gap on USD pairs to the downside. That's my expectation for the dollar this week. So I'm looking for sell. I'm going to sell. This will be my first target. This lows will be the next draw on liquidity. I think that's the weekly low, right? Yeah, the weekly low will be the next draw on liquidity. This low, and below that low, you can see we have a fair value gap that needs to be filled. So that's what I'm looking at for this week on the dollar. I expect dollar to sell, probably to fill this fair value gap. But this low will be the first draw on liquidity. Okay, so that's my expectation for the dollar. You can see dollar for some time has been ranging, but we'll still find opportunity in the market. We will definitely find opportunity in the market, buy or sell opportunity. So that's my take for the dollar. Okay, so let's look at pairs, right? Okay, we'll start with GBP USD. GBP USD. Okay, GBP USD. Let's start with the weekly. Good. So you can see what we have here on the weekly. First thing, identify the high and low of that week. This is the most recent swing high and swing low. Then I also identify this swing high. These are the levels that price is going to hit this week. Probable levels that price would hit this week. So first identify those levels. Okay, so I want to also know where price is now. Is price at discount or premium? So what do? I would apply my Fibonacci to know if price is at discount or premium. So from this swing low to this swing high, you can see that price has pulled back to a discount. Last week, price pulled back to discount, and you can see we had this fair value gap. That could also be the reason for the pullback. This fair value gap here. Okay, this fair value gap, this gap here could be the reason. And even below, we still have this gap here. But you see the reason price might not come to fill this gap completely. This resistance don't support. You see this resistance don't support. That could be the reason, because this is like a breaker block. You can see this high was used to sweep the liquidity residing this low. So this is like a breaker block. You can see this is like a breaker block. So that could be the reason price didn't come to fill this gap completely. That is the reason. So you can see how last week candle closed. It closed strongly bullish. Mr. Nayo, good evening. It closed strongly bullish. You can see it closed strongly bullish. You can see that. So with that, I can tell that GBP USD is set for buy. Set for buy. Now, buying from the current market price is at a very high risk. If you go down to daily, okay, you can see we had, this is an engulfing. Can you see this engulfing pattern? We have this engulfing pattern. And you see that price pullback. We had this fair value gap. You can see this fair value gap on the daily time. Price pulled back, filled that fair value gap, add this support here. You can see the reason that gap was not filled completely, because we had a resistance don't support, which here you have, you can see this mitigation. That's a mitigation block. Okay, we had a mitigation block here, and the mitigation block, in order of priority, when considering the institutional price delivery algorithm, when you're considering it, the breaker and mitigation comes before order block. It comes before fair value gap. So if price gets to a breaker or a mitigation block, price might retrace from that level. It might retrace and not go to fill the fair value gap. Okay, so in order of priority, breaker mitigation comes before fair value gap. So I think that's the reason price there was a rejection from this point. This mitigation level is the reason for this rejection, and price might not come to fill this fair value gap. Okay, so after that rejection, one would have entered by, let's say, 4 hours. So this would have been the best entry. You can see here we had a spinning candle here. This would have been the best entry. So if I didn't buy from this point, I don't want to buy from this point. So I'd love to see price retrace back. I would love to see price GBP sell drop. See, we have this fair value gap, but I am not certain it's going to get to come fill this fair value gap. I'm not certain. Okay, but I would love to see it at least do a little retracement, at least 50% retracement of this move. I would love to see that before I will consider entering a trade on. So I'll just, what I need to do here is apply my Fibonacci from this swing low to the swing high. At least price should pull back to a 50% level before I will look for buy pattern. I'd love to see price pull back to a discount level, which is at equilibrium or below equilibrium. That's my take on GBP USD. So my bias for GBP USD this week, I'm looking for buy opportunity. Technically, GBP USD should buy. Technically, maybe it's buying. Like I said, this is the next target. That will be the first target. Draw liquidity will be this, and above it, you can see we have these gaps that has not been filled. So those are my target for this week. We have this gap here. We have this gap, and we have this gap. So that's my take for GBP USD this week. I want to buy GBP USD to these levels this week. I hope that is clear. Please give the video a thumbs up if you haven't done that. I appreciate those of you that have given it a thumbs up. If you haven't, please do that. Okay. So the next pair is someone said we should look at. Okay, let's look at EU before we look at GG and gold, Euro USD. Euro USD. Let's start with the weekly. Okay, so what can we see first on the weekly? Identify the highs and low, the obvious swing highs and lows. You can see that's where liquidity resides, high and low. Don't complicate your analysis, keep it simple. We also have this swing low. These are possible areas markets will go to this week. Okay, so this is swing high, swing high, swing high, swing high. So after the formation, what can we also see here? Let's apply our Fibonacci from the swing low to swing high. Where is price now? Price is at discount. Price is at discount. And at discount, I don't want to sell at discount. So I'm looking for buy opportunity. So we have this resistance on support here. So that could be the reason. You see the gap here might not be filled because we have this here, resistance on support. Go back here also, we also have this resistance on support. This resistance on support, you can see. We have this resistance on support. This is a resistance, right? Why is it a resistance? This was a support here, right? It was a support here. Price broke out from this support, and when a support is broken, that support becomes a resistance. That's why I'm calling this a resistance storm support. It became a support after price broke out from this level. Okay, so that's it. Let's go down to daily. After the close of last week candle, last week candle looks like a spinning candle. So let's see what we had on daily. So on the daily time frame, what do we have here? We had an hammer. Let's call this an hammer. Now a valid hammer is not supposed to have a wick above it, but these days it's very difficult to find a candle without a wick above it or below it. So if you're looking for a valid hammer, you will look for it and you will not find it. So you have to use discretion. Okay, so if it has a little wick above it, in as much the wick below is 2 times the body, it is qualified to be called an hammer. It is qualified to be called an hammer in as much the wick below is at least 2 times the body. So this is a hammer, a bearish hammer, and after the formation of a bearish hammer, you have to wait for the next candle to close. You wait for the next candle to close bullish. Oh, few minutes, please. few minutes. Sorry. Okay, so that is it for Euro USD. Okay, so we had, so if Monday candle closes bullish, that would be a strong confirmation for buy. If Monday candle closes bullish, that would be a strong confirmation for buy. But I don't want to wait for Monday candle to close. So what should I look out for? I need to work with 4 hour, 1 hour, and 15 minutes time frame. Okay, as a day trader, I need to work with the 4 hour, 1 hour time frame and 15 minutes time. So what do we have on 4 hour? Okay, so we had an armor here, and we had this the swept liquidity resetting at this low. So now this level here is a high level of liquidity that might be used, that might be swept. See this low here. A lot of stop losses reside, so they might want to come for this low before going bullish. They might want to come for that low before going bullish. So I want to see a sell. Okay, I want to see a sell before going bullish or GBP USD. You can see that the 1 hour time frame. You can see that from the 19th, GBP Euro USD was just ranging, no clear direction, on GBP USD, as you can see. So they might want to sweep sell side liquidity. So since the market has been in the range for some time, now I'm considering buying. I'm interested in price breaking out from this resistance, or you call it supply area. I would love to see, you know, price breakout from this. If there's a breakout from this resistance zone, then that would be a good time to look for buy. And if there's a breakout, but I'm not interested in the breakouts because based on what I have on the weekly and the daily, I should be looking for opportunity to buy. So I'm not interested in breakout from support. Okay, I'm interested in breakout from the resistance area. If there's a breakout from support, I will see that as a sweep of liquidity. Okay, sweep of the sell side liquidity. I will see that as sweep of sell side liquidity. Then after the liquidity, the sell side liquidity has been swept, I'll look for a buy pattern to form before going bullish. So it's either price breaks out from this resistance supply zone for me to buy, okay, or price sweeps the sell side liquidity and gives me a bullish reversal pattern for me to buy. Okay, so that's what I'm looking out for on Euro USD. I'm bullish on Euro USD. If you are considering selling, then you want to wait for price to sweep buy side liquidity first. Okay, wait for price to sweep buy side liquidity, or wait for price to break out from this support. Okay, wait for price to break out from this support. Then you could wait for a retest of that support store resistance before you sell. Okay, you could wait for a breakout, a retest before you sell, or you wait for them to sweep buy side liquidity before you look for your bearish reversal pattern. I hope that is clear. So that's my take on Euro USD. I'm looking for opportunity to buy Euro USD this week. Okay, let's look at gold. Please confirm you can still hear me. Confirm you can still hear me. Confirm you can still hear me loud and clear. Gold. Let's start with the weekly. Please confirm you can still hear me loud and clear. Okay, so gold also, no clear direction on gold. Or through last week, gold was just ranging. We had Monday, Tuesday, Wednesday, Thursday, Friday, no clear direction. Okay, so here we had this gap, and the market has been finding it very difficult to break out from this gap. Can you see that? So there was the first time they filled it at this point, filled it second time, third time filled it. So they know these lows will be liquidity, right? A lot of stop losses will be residing at this low. So what they did on Friday, no, last week, was to sweep the liquidity. They have swept that liquidity, so they swept that liquidity. So I would love to see gold buy, Okay, see this sell here. I think this sell was used to fill this gap. Okay, we had this fair value gap here. Can you see that? Can you see that? they fill that gap. And also if you apply your Fibonacci from this swing low to this swing high, you can see that price had to pull back to a discount area, filled this fair value gap. This is the reason for this strong sell you see here. This is just the reason. This fair value gap is the reason. And after they fill that gap, see the strong rejection from that gap. So price most likely might not come to this zone again. It might not come visit this zone. Though this low, the low of this candle still remains a level of liquidity. Okay, that might be visited, might revisit this level sometime in the future. They might. Okay, so let's go down to daily. What do we have on a daily? Okay, so here on the daily we had, it was Friday, Thursday, Wednesday, Monday, Tuesday, Wednesday. Okay, so if you look at the daily time frame, let's apply our Fibonacci from this swing low. Let's see where price is now. Okay, so price has pulled back to equilibrium. You can see there's a strong rejection from that equilibrium. Okay, there's a strong rejection from that equilibrium. So what do we have here? We have a resistance area we can work with here. It created a resistance here. It also created a resistance here. So this is our resistance zone or supply zone. If a candle breaks out from this zone, now look at what has played out here. You can see we had this low, which was a level of liquidity. You can see price had to pull back to sweep the liquidity reset at this low. And so we have that resistance. My bias is bullish. Let's see for hour. We should be able to identify a bullish reversal pattern on 4-hour time frame. So we can see also resistance on 4-hour time frame. So breakout now. See what played out here. We had this fair value gap on a 4-hour time frame. Can you see this gap on a 4-hour time frame? Price pulled back and filled that gap. Can you see that? It filled that gap, and you can see there's been strong rejection from that level. So if you want to buy gold this week, my bias for gold is buy. Just wait for price to break out from this resistance. Okay, the candle, the body of the candle should close above this resistance level. That has been demand. The bullish momentum is increasing and the bearish momentum is decreasing, and that will be the right time for me to risk buying gold. That will be the right time for me to risk buying gold above this resistance. Okay, above that resistance. Let's see if there's still a fair value gap that I want to fill. Now, these lows, as you can see, these lows are still levels of liquidity. There are a lot of stop losses residing at this low, so they might still want to come and take some more liquidity before going bullish. This low also, okay, this low also is a level of liquidity. They might still want to come. So if you want to take a trade, you want to ensure that your stop loss is below these levels. Your stop loss is below these levels because they might still want to come and sweep these lows. But let's see. Let's see. Maybe after the formation of this candle here, let's see. Maybe this pullback was to fill a fair value gap that was created at this point. Let's see. If that is the case, then they might not come to sweep liquidity again. Let's see. So this is 15 minutes. So we had this liquidity here. And that could be the reason. See this lows here, this lows here. You can see this lows here because after this breakout, we have a breakout from a resistance here. Most retail traders would have bought. Even the patterns we have here, bullish reversal patterns, breakouts, and most retail traders will have their stop losses set here. And I think that is the reason for the sell. They had to come and sweep the liquidity. If you go down to lower time frame, 5 minutes or 1 minute, I'm sure we still have a fair value gap below this candle. That could also be another reason. Let's just check 5 minutes and 1 minute time frame. I think there has to be a fair value gap. Let's just confirm. Let's see. So you can see here we have this gap. This could be the reason for the sell. See this gap here. You see this gap here. Let's see what happened when price got to this level. So you can see at this point there was attempts to fill this gap here. They didn't fill it. All these were just trap for retail traders to start buying. And where would they set their stop loss after buying? It will be at this low. So you can see all the bullish reversal pattern we had here. So most retail traders, if you also apply a Fibonacci from this swing low to this swing high, price has pulled back to a discount. So most people want to buy, and where would they have their stop loss at this lows? So let's see when market got to that level, let's see what happened. You see, got to that level. You can see there was a rejection from there. You can see that it filled that gap and there was a rejection from there. So gold might not go sweep take more liquidity. It might not. It might just keep buying from the current market price. Most likely we might see a gap on gold to the upside. Okay, we might see a gap on gold to the upside. Let's just wait for the market to open. Okay. So my bias for gold this week is buy, 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 buy. I'm not interested in selling gold this week. I'm not interested in selling gold this week. It's a buy, buy, buy for me. Then GJ, I think that will be the last pair for tonight's session. That will be the last pair for tonight's session. If you have any pair you want me to analyze, just let me know in the comment section. If you have any pair, if you get to give the video a thumbs up, please give it a thumbs up so that others can get to see the video. The more likes the video has, the more the algorithm pushes that video so that others can get to see it. Okay, so please give it a thumbs up. GJ, like I said, my bias for the yen is bullish. So I'm only interested in selling GJ this week. You don't expect me to sell GJ at the current market price. It does not make sense. You don't expect me to buy, I can't buy GJ. No. It would be an error for me to buy GJ at the current market price. Let me look at GJ. Let me see if I let me see. GJ should be at premium now. Let me just confirm that. GJ should be at premium now. Daily. Okay. GJ should be at premium. Daily. Okay, GJ is at premium now, so it's at premium. So at premium, I'm not considering buying. I'm looking for sell. GJ is at premium, and the buyers is bearish. It's bearish, so I'm looking for opportunities to sell GJ this week. Okay, I'm looking for opportunities to sell GJ this week. So let's see. Okay, so you can see it's at premium now. If you apply a Fibonacci, all right, let's apply our Fibonacci from this swing high to this swing low. So where is price now? You can see that price is currently at a premium. So I cannot buy time frame. On Thursday we had a spinning candle. Most of the traders would have jumped into sell. And where would they have their stop loss? Their stop losses would have been at this high. On Friday, they used that high as liquidity. They used the high of this spinning because the normal street traders would have entered sell. Okay. Normal street traders would have entered sell now. Before last week. Okay, so you can see here we had, let's see if price tested this resistance. Support on resistance, you can see this is like a breaker because we had liquidity resetting at this high was swept. Sorry, the liquidity, so we had this breaker here. So this is, you can see this shoulder liquidity. So this is like a breaker block. Okay, this is like a breaker block, and price tested first attempt, second attempt, third attempt, like four. This is the first attempt, second attempt, third attempt, fourth, fifth. So you can see this level has been holding price. This level has been holding price. Now, if you apply based on what we have here, if you apply your Fibonacci from this swing high to this swing low, this is on the daily time frame. You can see what we have. Price is currently at extreme. Price is currently at extreme premium, which is above 75%. You can see price currently at extreme premium. So you can't tell me you want to buy GJ, even if you do 1,000 pips. This is not right time to buy. It has done from this point. It has done over 200 and something pips. GJ has done 200 and something pips. So why would you be the one to buy when the market has already moved in one direction, 200 and something pips? Okay, so if you insist that you want to buy, price should pull back. You can see if I've created a fair value gap here. This is where you should be considering buying. price should at least do a 50% retracement before you buy. Okay, at least this should come back here, 50% retracement before you buy. But buying from this point, it doesn't make sense as far as I'm concerned. It's not a wise investment. That's not a good trade to take. So you can see what we have on the 4 hour time frame. So for our last candle for the week close from it now, see what we had here on 4 hour. It came, you see this fair value gap, that could be the reason for the buy. That could be the reason this fair value gap. You can see price pulled back and filled that fair value gap completely. That could be the reason. There have been several attempts to fill that gap here. All this was just to set trap for retail traders to jump in and start selling. At this point, there was an attempt to fill it. They didn't fill it. They intentionally did not fill the gap. So they created relative equal high, which is a high level of liquidity. Stop losses will be residing at this high. Then here also there was an attempt. Stop losses, you can see the candlestick pattern from bearish reversal pattern, bearish reversal pattern, bearish reversal pattern. Most retail traders, that is what you've been taught. When you see all this pattern, you want to sell. Okay, and also at this point, there was an attempt to fill the gap. They didn't fill it completely. Stop losses residing at this high. You can see I actually took this trade also. GBP, JPY, I took a sell last week. I took a sell on GBP, JPY. For my stop loss, I knew they were going to, there's possibility for them to come and fill this gap before going bearish. I knew. So I had to set my stop loss several pips above this level. I have to set my stop loss several pips above this level. So if this week, if they're able to push price down and close it below the support, then I can now adjust my stop loss to this level. If they're able to push price below this support area, that's when I will adjust my stop loss. Okay, so my bias for yen, GBP is to sell. Is to sell. Okay, and most likely they will come fill. Most likely they might come fill this fair value gap. I don't. Okay, this week we have news for GBP, but I don't think we will have any news for. I don't think we have any news for yen this week. No news for yen this week. Only GBP, and that will be on Friday. Yeah, that will be on Friday. So that's my take for GBP, JPY, and I think that will be all for tonight's session. Any question? Any question? I hope you got value from tonight's class. Do you have any question? Any question? Any question? Let me know in the comment section. People saw Mrs. Damilola, Favor, Sam. Who else we getting in this meeting? So if you have any question, let me know. 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 Please, as you trade this week, please be very conservative. Please be very conservative. Taking the necessary risks will result to drain off your account. Take it easy. If you rush this market, you would crash. You would crash. You would crash. I've been trading this market for over 10 years. I have over 10 years trading experience. And I can tell you the 90% of those who lose money in this market are those who don't apply proper risk and money management. Those are the people that call Forex scam. Those are the people that call Forex, that attack Forex trading as a scam. You don't want to be among that set of people. They are frustrated because they took unnecessary risk. They lose huge amounts in a very short time. And most of them, when you mention Forex to them today, they don't want to hear because of their mistakes, because of the silly mistakes they took. Please don't take unnecessary risk. Before you execute a trade, know how much you're going to lose before you execute the trade. Don't gamble with your hard-earned money. Don't gamble with your hard-earned money. Please apply proper risk and money management. If you are interested in trading signals, you can send me a message. Okay, if you're interested in trading signal, my trade signal is not free. Now, the general group have been dropping signals, and the signals they've been good so far. They've been good so far. So I'll be dropping maybe 1 or 2 signals on a weekly basis. I'll drop it. Most likely to be on just Euro USD and GBP USD, Euro USD and GBP USD. If you follow those signals, you'll definitely make profits at the end of the month. Every week is not a winning week. Some days I lose, some weeks I lose. Okay, but at the end of the month, if you consistently follow those signals, you would be in profit. You would be in profit. But if you want VIP, if you want to join the VIP signal group, send me a message on WhatsApp. Send me a message on WhatsApp. And very soon, hopefully, I'm going to launch my copy trading service. I'm going to launch my copy trading service. Okay. So when I'm set for that, I'm going to let you know. I'm going to let you know. So any question, any question, any question, any question, any question, any question. Any question, any question. So it appears there are no questions. It appears there are no questions. Please, if you haven't given the video a thumbs up, please do that. So I want to appreciate every one of you for your participation. Mrs. Chibuzo, Mrs. Damilola, Mr. Sam, Mr. Anayo, and Navy Boy. I think that is favor. I appreciate you for your participation. Everything I do is it's my greatest desire. That's everything I do is, I'm just interested in your success. Trading is hard. Let nobody tell you it's easy. It is hard. It is the most difficult should I say career or job, but it's the most rewarding also. It is the most rewarding. So don't let anybody tell you it's easy. We were told it was easy. That was why when we came in, we thought we can make easy money, but the case was the opposite. The case was the opposite. So please just take your time. Take your time. Okay? Take your time. Money will always follow mastery. That's what I always preach. Get the skill of trading. Understand the market first. You might be losing now, but you are growing, but you don't know you are growing. That's if you are doing the right thing. If you're doing the right thing and you are still losing, trust me, you are growing. You understand? You are growing. Just ensure that you are doing the right thing. Master, understand. Once you have the skill of trading, money, most of you are saying capital is an issue. Capital is not your problem. You've not acquired the skill of trading profitably. Once you understand the market well and you become profitable, it's money that will chase you. You will not be the one chasing for money. Focus on becoming good at trading. Don't chase for capital. Capital is the least thing in this market. Is the capitals are there. We have firms there that will give you money to trade. But are you profitable? Are you profitable? You are not profitable. You want to go and get money from people to trade for them. That's the wrong thing to do. That's the wrong step to take. You will regret at the end of the day. Don't collect money from people if you are not an experienced trader. If you are not a profitable trader on your own account, you are not profitable. You cannot show consistency for like 2 months, 3 months. You've not even made withdrawal since you started trading. Don't take that step. Don't take that step. Even prop firm trading, don't do it if you are not profitable on your own life account. If you are not profitable, if you don't have an hedge that gives you more winning than losses, don't take those steps. First of all, build the skill of trading. Build the skill of trading. Don't focus on the money. Focus on the process. Process. A lot of people don't want to go through the process. Process first. Process. Learn the skill. Then money will follow. So that will be all for tonight's session. I wish you all a wonderful night. Our next class will be on Tuesday. I don't think there's need for us to have a class tomorrow. I've told you what I'm looking out for. So our next class will be on Tuesday. We'll have a review session on Tuesday. Once more, I appreciate you all. Do have a wonderful night.